welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the market so that we all know exactly what is happening. Thank you very much for joining us once again in the live chat. We have people already talking about the market. Let's take a look now at CoinMarketCap and see what is happening to Bitcoin, Ethereum, and the rest of the market. We have Bitcoin set at $23,000, and we have Ethereum set at $1,574. So they've both seen a slight move to the downside since the weekend. Let's take a look at the Bitcoin chart and see what's happening here. We are still trading within this price range. We're looking between the $22,530 level and the $23,280 level. We did see a breakout of this over the weekend, but as I always say, I don't really trust weekend price action. We came back down, used that previous level as a resistance once again, used that previous level of support once again, and now we are waiting for a breakout from those two levels. We also do have a support down at $22,290 if we were to move to the downside, but I am waiting for a 4-hour candle to close either above that level of resistance or below that level of support before I enter any more trades. Let's move on to the news now though and see what is happening. We do these news updates every single day, so make sure to like and subscribe if you haven't already. We do them every day, keeping you up to date with the latest cryptocurrency news. We are on a mission to get 100,000 subscribers on the channel, so please help us out and make sure to subscribe if you do enjoy our content. We also have that Martini guy on the channel quite a lot as well, but it is just me today. Let's take a look at this article. Twitter's update on integrating payments reignites interest in Dogecoin. So Twitter have applied for regulatory licenses across the United States required to integrate payments onto the social media platform. So first they're going to integrate fiat, it seems, and then they will move on to cryptocurrencies. And this has caused a pump in Doge price. Let's take a look at Doge on CoinMarketCap and see what is happening here. So we've seen actually over the last 7 days, we saw a nice move to the upside. We started the week. Let's see where we are. We started a week ago, we were at a price of $0.084, and then we saw a peak of $0.097. So we did see a move to the upside. Very interesting article, this. It compares Twitter to WeChat. Now, WeChat is what they use in China. I've actually been traveling around China before, and they use WeChat for everything. I went to the toilet once, and you couldn't get toilet roll unless you had the WeChat application to scan a barcode. It's very, very controlling that you need this WeChat application to do everything in China. It's very interesting that Elon Musk is trying to use cryptocurrencies within the Twitter application when they're trying to make Twitter such a big application. Twitter is going to become, if he is successful on his mission, a huge part of society, and using that is kind of why we're moving towards decentralization, so we don't have this big central authority. But if Twitter succeed in their methods to try and become this do everything app, and we may see huge amounts of centralization, even though they are using cryptocurrencies within the application. But moving on now to the next article, let's first of all take a look at this analysis from the writer of our article here. The meme coin went up on to gain by 10% to post a local peak of $0.09564. So we did see a move to the upside, and it's saying here, the analyst is suggesting that we could actually manage to reclaim the 10 cents level as support. Now, I'm not a huge fan of Doge. I've never really held Doge for a long period of time. There was a time when Elon Musk used to have a very big impact on the markets. I used to have his tweet notifications on, and every time he'd tweet about Doge, I'd just enter a long position, 10x leverage. 5 minutes later, I'd exit that long position, and I'd be in profit because every time you mentioned Doge, it would fly up huge. I believe Elon Musk now has a little less of an effect on the markets. When he first discussed that he was investing in Bitcoin, Tesla were buying Bitcoin, the market shot up. Then they said they weren't accepting Bitcoin, the market shut down. He used to have a huge effect on the markets, but it's one of those things, the more he says things, the less impactful he will become on the markets. Hopefully, because we don't want a public figure to have that much effect on the entire cryptocurrency industry. Moving on now to the next article and see what happens here. Bitcoin analyst institutions are responsible for Bitcoin's recent rally. Now, this is according to a tweet by Willy Woo, who has said, this recent rally coincides with a new pattern emerging of stablecoins flowing into exchanges during work days only. Seems to be that like the heat signature of large institutions doing the buying. Now, looking at we look at the time zones in this article as well. So let's see here. The inflows often occurred within 16 hours of the day during the European and American working hours. He said, timing of the inflows spans approximately 16 hours, with the quiet zone being Asian work hours. This suggests it's Western institutions across the US and Europe who are taking billions in inflows. Now it's looking very interesting that we are seeing this adoption after the FTX collapse. We did see a little bit of a wobble with the trust within the industry. We did see CZ tweeting a couple of days last week. He said, impact of the new failed crypto projects last year. Short term, they hampered crypto industry growth, but we are seeing recovery already. Long term, he believes that they have really hampered traditional financial players to adopt the technology and will likely cause them to be further behind on the adoption curve, which may have existential implications for them in 10 to 20 years' time. So CZ is expecting that the FTX collapse is going to cause a little bit of a slowing down for adoption, but this is suggesting that we are seeing that adoption still take place. We are seeing us move forwards. We have seen a huge pump in Bitcoin recently. I do believe we did see greed go up to 61 on the Fear and Greed Index this week. However, I do believe there is still a huge amount of fear in the industry, and if Bitcoin starts to move down slightly, we could see a lot of people with weak hands exit their trades and see some liquidations for long positions very quickly if we are to move to the downside. I don't think that fear is completely over. We're not in bull market mentality where everyone just thinks the Bitcoin price is going to recover really quickly and continue moving upwards on every pullback. I think a pullback could be quite dramatic if we see one, because people do still have that fear. We haven't got that positive investor sentiment that we see within a bull market back just quite yet. Jess, is Bitcoin back to pre-FTX levels yet? Said Jason Smith. Yeah, taking a look at the charts, we can see the FTX collapse was back in November, and we saw this huge move to the downside. This, at the point before this, we were at $21,420. So we are well above them, looking very positive. We've erased all of those mistakes that were made by SBF that impacted the markets. We are seeing some improvement now. I believe we do have some news about SBF as well. Let me pull that. I haven't even pulled that up for today's video. Let me get that up. We can talk about that now. We've posted it on our Instagram. Let me get the Instagram up for Crypto Saving Expert. We have the Instagram up here, and you can see that the US District Judge Lewis Kaplan has just ordered that the names and details of the individuals who paid for Sam Bankman-Fried's $250 million bail can be made public. So SBF got let out on bail for $250 million. Now, I think only 10% of that has to actually be in physical cash. I think it was his parents' assets that were being used as collateral for this. But the two other people had to sign his bail before he could, for it to continue past a certain date. I think he was allowed a week, and then he had to get 2 more signatures on his bail. The names of those 2 more signatures were not released to the public, but now it has been ordered that the names and details of the individuals is made public. So we'll hear who those people are that wanted SBF on bail. So it'll be very interesting to hear that news come out in the next couple of days. Someone's asking, Jess, what is happening with XRP/Ripple? Let's take a look at the market, see if we've seen any effect on this. XRP, see what's happening over here. Last time I checked, it wasn't doing too much. We have seen a little move in the markets. As I was saying in yesterday's video, let's discuss this. I was looking at the altcoins that haven't performed as well as the rest of the markets so far this year, because obviously the markets have seen a nice move to the upside this year, and I wanted to see some that could be lagging behind and maybe could be playing catch up. And I believe XRP was quite high on this list. XRP hasn't seen as much movement as the rest of the altcoins. You can see we've seen an 8% increase this year, but this is actually a list of the top 100 altcoins in terms of worst performing altcoins so far. If we remove all the stable coins from this list, XRP is quite high on this list. We haven't seen too much movement, but as expected, we still are waiting for some more news on that. Terry is saying, where is that Martini guy? He's not joining us today, but he will be back in a stream one day soon. He does join us every now and then to give us a bit more of an insight onto the news. Let's move on now to the next article and see what is happening. We got on a complete I don't know what the word I'm looking for is. We got distracted a lot there. Let's see where we are. We're up to this news article here. Hong Kong to regulate stablecoins with a risk-based approach. So according to a press release, the regulator's decision stemmed from feedback received from a discussion paper released to the public on crypto assets and stablecoins. They released the discussion paper in January January 2022 and ended the consultation period in March the same year. The regulator received 58 submissions from several individuals, public bodies, businesses, and professional organizations. In the feedback, the respondents expressed their support for the regulator's plan to regulate stablecoins with a risk-based and agile approach. They also urged the regulator to take the recent market development into account and draw reference from several international agencies' regulatory strategies. So they've said, the chief executive of the HKMA has said, an appropriate regulatory environment will help address financial stability risks possibly posed by stablecoins and promote the orderly and sustainable development of the industry. We are grateful to the respondents for their valuable feedback to the discussion paper on crypto assets and stablecoins and their general support for our recommended regulatory principles and direction. So we are seeing stablecoins being adopted, but they may not approve algorithmic stablecoins. Obviously, we saw UST depeg from the dollar back in May 2022, and it had an awful effect on the entire cryptocurrency industry. But we've seen here in drawing up the specific regulatory arrangements, the HKMA will consider the feedback received, latest market development, and international discussion. We will also engage with stakeholders and market participants. We expect to implement the regulatory arrangements in 2023 and 2024. Now, interesting opinions on this, because we have actually seen today in an article later in today's news, we'll discuss this now, an ADA-backed decentralized algorithmic stablecoin has gone live on the Cardano mainnet. Now, we are seeing growth on Cardano. Cardano is a very slow-moving cryptocurrency. They work very slow behind the scenes building a cryptocurrency. I am a big fan of Cardano. It's the very first cryptocurrency that I ever invested into, down at about 6 cents, and then I sold it for 5 cents. So I did unfortunately make a loss on that trade, and if I just knew how to have diamond hands at that time, I would have been in big nice profits. But I am an investor in Cardano. Let's take a look at this. A decentralized stablecoin intended to peg the US dollar, but it's actually over collateralized by 400 to 800%, while utilizing Shen as a reserve coin. It is comparable to the Ethereum's ecosystem DAI because of its excessive collateralization, but it also contains a minting and burning process like other algorithmic stablecoins. So how they will peg the stablecoin to the dollar is every time the price declines below $1, they will, now this will mean the price is low, so they will mint more. No, they will burn some stable coins. They will take some out of circulation. And when they take some out of circulation, they are artificially pumping the price of the asset. When the price goes above $1, they will mint some stable coins, therefore increasing circulation, pulling the price down. I always get confused which way around that is, but that is correct. If you put more into circulation, then you are decreasing the value of the assets because of the law of supply and demand. And if you are decreasing the supply, then you are making the assets more valuable because there's less of a supply and the demand is staying the same. So that is how they are keeping the algorithmic stablecoin pegged to the dollar. Before we continue today's live stream, please make sure to like and subscribe and press the bell notification button. We have a lot of news to discuss, and we talk about this every single day, so make sure to join us. Taking a look further at this article, the collateralization is based on the highest monthly decline in ADA's price at any time, which was around 66% at the time the KT team researched, which they used to calculate the 400 to 800% ratio. The ratio led to the conclusion that Djed's over-collateralization by 300% would help to have an adequate reserve in case it happened again. Now, very interesting in this, I'm not sure how many people are trusting algorithmic stablecoins right now since the UST collapse. But this over-collateralization is a good thing. When we had UST collapse, they sold a lot of their assets incredibly quickly, maybe too early. So they no longer had that collateralization for that token. So it completely fell through the floor. Let's take a look at the fee structure. Like other stablecoin minting systems, Djed's platform is designed for large-scale transactions, such as significant mints and burns, as opposed to small micro-transactions, which are better left to decentralized exchanges and centralized exchanges. For this reason, the team behind Djed chose the following specifications contained in the image below. So we have a 1.5% Djed mint or burn fee. We have a 5,000 Djed minimum mint requirement and a 1,000 Djed minimum burn requirement. The Shen burn fee, mint or burn fee is 1.5%. The Shen minimum mint requirement is 5,000 and the minimum burn requirement is 2,500. Djed and Shen operational fees are 100 ADA and Shen minimal price is 1 ADA. So the specification only applied to Djed's platform. Users can always exchange Djed and Shen on decentralized exchanges and centralized exchanges with any quantity they choose. The equity is raised by the platform fees, which also increase the value of Shen. But because Shen will also be traded on the open market, we anticipate that thanks to arbitrage, its price on the platform will be the same as its price on decentralized exchanges and centralized exchanges. So maybe some good arbitrage opportunities coming up. But that token and dynamic fees will be included along with expanded Djed in later upgraded versions. So obviously we are covering in this article the fall of Luna and its algorithmic stablecoin, Terra USD. Very interesting, but we may be looking at that in the future. Moving on to the next article, seeing what is happening here. We have Grayscale sued by Osprey Funds for misleading advertising on GBTC's conversion into an ETF. So what are we looking at? Grayscale is looking for a spot ETF for Bitcoin. It has a lot of assets, Bitcoin, to back that ETF, but they keep being denied by the SEC. Osprey filed the suit in Connecticut's Superior Court on Monday, accusing Grayscale of engaging in deceptive acts and unfair competition. The firm also accused Grayscale of implying the GBTC will eventually be converted into an ETF. Grayscale has made materially false and misleading statements in its advertising and promotion to the effect and substance that turning its Bitcoin asset management services into access to a Bitcoin ETF was a foregone conclusion when it knew that the access was never likely to happen. So they are trying to, let's continue with this piece of the part of the article and then we'll talk about it a bit more. Osprey added that Grayscale's unfair trade practices allowed the firm to lock 99.5% of its assets under management in trust-based crypto products, despite GBT's fee being 4 times higher than what Osprey is offering. So essentially, GBTC were trying to say that they would be getting that ETF, a Bitcoin ETF confirmed, and they were going to have their stocks basically pegged to the price of Bitcoin, allowing traditional investors to get involved in the cryptocurrency space without having to worry about the security of their funds. But now they are getting sued because they made it seem like they were likely to get that Bitcoin ETF confirmed when it is obviously previously been rejected by the SEC multiple times. A spokesperson of Grayscale told Bloomberg that the allegations by Osprey Fund had no weight and the company was still trying to convert GBTC into an ETF, as seen with its ongoing lawsuit against the SEC in Washington. And she has said the lawsuit filed by Osprey Funds against Grayscale Investments is frivolous. The conversion of GBTC to an ETF is the best long-term product structure for Grayscale's investors, and approval of a spot Bitcoin ETF would directly benefit our industry peers. As Grayscale, we remain confident in our common sense, compelling legal arguments, and we look forward to a final decision from the DC Court of Appeals by fall 2023. Now, Grayscale trades at a much lower price than the Bitcoin price. So it actually is, people are looking at this as an arbitrage opportunity because if they buy Bitcoin at this lower price, we can see here GBTC is trading at 42.5% below its reserves. So if you buy in at these price and the Bitcoin ETF does get confirmed, you make a 42.5% gain, which is a huge gain. So people have been looking at this as an arbitrage opportunity, but whether they get that ETF confirmed or not will be interesting. We did see an article earlier last week that was saying that they would come to an agreement with their investors if that ETF was completely denied and there was nothing that they could no longer do about that. Moving on to the next article, we have an Ethereum testnet will allow users to test withdrawals on February the 1st. Before we move on to this article, please make sure to like today's video and subscribe and press the bell notification button to help us grow the channel as big as possible and educate as many people as possible about cryptocurrency. we are seeing here that an Ethereum withdrawal testnet is going live. So a testnet is what developers use to make sure that their code is all running smoothly so they can test their code and make sure it's all correct before deploying it onto a mainnet and paying all of those transaction fees. So when we're using a testnet, we can get testnet tokens that act as Ethereum on the testnet, and we can use those tokens and use them as Ethereum to make sure everything's running smoothly rather than paying for actual Ethereum and using actual money to test our applications. Let's take a look now at this article. Ever since the Beacon chain, the backbone of the current Ethereum 2.0 blockchain, went live in December 2020. Users have not been able to withdraw their staked funds, including rewards earned on the network. The testnet has been designed as a precursor to the much anticipated Shanghai upgrade, which carries the core withdrawal functionality. So those that have staked there with their Ethereum will actually be allowed to withdraw those Ethereum within the next couple of months, and it's on track to happen between March and April this year. So this is a testnet that will allow us to test all of those functions. Moving on to the final article of today's video, and it is Celsius used customers' deposits to fund CEL purchases, sell purchases, says an independent examiner. Now let's discuss this. FTX and SBF were supposedly using users' funds to trade with, to buy FTX token with, to funnel those funds into Alameda Research, using all of our funds incorrectly. And then in an article we spoke about yesterday, we saw FTX and SBF say that they partially blame SBF actually did crash Celsius's markets. SBF supposedly dumped a huge amount of staked Ethereum into the markets, and because Celsius were a huge holder of those, they caused Celsius to fall. But now, obviously, Celsius, it looks like they have been, it's suspected, we should say, that they were actually incorrectly using user funds as well. Now, they all seem to be blaming each other, but the point is, if you're corrupt inside, it's going to come out anyway, and the sooner it comes out is the better. Celsius, if they were using customer funds incorrectly to buy, sell, and pump the price, they were in the wrong, and they were doomed for failure anyway. FTX, if they have, we've already seen actually Gary Wank and Caroline Wilson, what was their name? Caroline something. I knew that name as well. It's gone out my head. They've both pleaded guilty for the crimes performed within FTX and Alameda Research. So we've already seen that they were doing things incorrectly within that company. We're now seeing it within Celsius as well. So both companies were doomed for failure. They can blame each other however much they wanted, but they weren't using customer funds correctly. So they would have been found out in the end. Let's take a look at this. According to a recent filing at the bankruptcy court, Palais found numerous loopholes in the Celsius's managerial structure. The court appointed an individual examiner in September last year to evaluate the firm's operations in the months leading up to its insolvency. Recall that Celsius filed for Chapter 11 bankruptcy protection in July last year, a month after halting withdrawals and transfers between accounts due to liquidity issues. The scrutiny of the firm's operations showed that Celsius had liquidity issues for a long time before it went underwater. And the examiner disclosed that the beleaguered lender used customers' assets to fund purchases of its native token, CEL. Celsius, they've said, Celsius recognized that it should not use customer assets to purchase the coins necessary to cover liabilities to other customers, but it justified its use of customer deposits to fill this hole in its balance sheet on the basis it was not selling customer deposits, but instead posting them as collateral to borrow the necessary coins. They have said the bankrupt crypto lender also used new customer deposits to fund existing customer withdrawal requests in a Ponzi-like manner. Due to the $1 billion hole in Celsius's balance sheet, the lender had inadequate liquidity to handle anticipated future withdrawals, and its liquid assets were steadily diminishing. The examiner argued that if the lender had not suspended transactions as when it did, then new deposits would have been its only source of coins to fund withdrawal requests. And if we look back at what happened, the lender claimed 80% ownership of customer assets during its first bankruptcy hearing. Very interesting news to come out here. We see this more and more. We are seeing all of these companies that went bankrupt last year actually getting some repercussions. We're seeing them actually be exposed to the public of what is actually been happening behind the scenes in cryptocurrency. This is in a Ponzi-like scheme manner. Ponzi-like manner, I would say that is the perfect term to discuss this. If an exchange is requiring a new person to deposit money in order to process withdrawals from older users, they are just moving money up the triangle. If they are using customer funds to pump the price of sell, then they are using customer funds incorrectly. It's good to see these bad actors up the space at the end of the day. People lost a lot of money last year when the markets were crashing, when the centralized exchanges were going under, but we're seeing the bad actors being exposed and being removed from the industry. The longer these companies were functioning within the cryptocurrency industry, the more harm they would have had in the long term, and the worse you can see how bad the actual insides of these centralized exchanges are. And we're now pushing to have transparency. We're seeing proof of reserves. We're seeing the industry grow in a way from these big problems that we've seen, because the truth has all come out. And Terry has said, telling the truth is always best. It's just hard to swallow sometimes. Exactly. We've seen all this negativity within the space, but we are seeing positive things growing from it. We need to continue to see that. We've seen how bad the big actors in the space are, and showing why we need decentralization. We do need centralized exchanges within the space to help onboard and offboard new fiat currencies and new customers and get people involved in the space. But it is always important, as we always say, to move our funds onto decentralized exchanges, decentralized wallets, because decentralized wallets, because you never know what is going to happen. So that is all we have for the news today. Let's take a look at the charts again and see what's happening here. We still are trading, if we look at the 4-hour chart, within these price levels of $22,536 and $23,270. I was a little bit precise there. Give me a little bit of leeway with that support. We also are looking at that level of support down at $22,290. So we're currently trading within this range, waiting for a breakout. Personally, I am on the 4-hour chart. Let's take a look at some indicators as well and see what is happening here. That is not the correct button. I want to be looking over here. Let's take a look at the RSI on a couple of different time frames. Oh, we already have them on our chart. The RSI is basically neutral, but slightly oversold on the 4-hour chart, and the MACD is indicating that we have a little bit of bullish momentum. But let's move into the wider time frames. You can see on the daily chart, the MACD is taking a bearish momentum, and the RSI is back within the neutral range, but is looking slightly overbought there. So just something to be aware of. This is all we have from today. Thank you very much for watching. Please make sure before we end today's stream to like today's video and subscribe and press the bell notification button, because we do these live streams every single day. We'll have that martini guy on us soon. Thank you very much for watching, and I will see you tomorrow.